Anand Tandon joins us on the show. Anand, hi, good to be speaking with you. What do you make of the market mood right now? Throw the global worries, throw earnings downgrades, throw any other news flow, GST or not, but the Indian markets only know one direction.
That's right. There is still a lot of optimism in the domestic market. To some extent, I think the US market gave a little bit of a, a push as well because of the expectation that there will be a rate cut in the US, and that may help emerging markets. But I think India is in a trajectory of its own and is currently not looking for any negative news. So long as the flows continue, I think the market direction is reasonably settled.
Anand, so what's your view coming in on the entire metal pack? Because a lot is happening around the globe when you talk about commodities. But back home, when you talk of the metal sector, which side of the fence are you when it comes to that particular space?
Well, really in India, there are only two areas you could be looking at in terms of metal. There is steel and there is aluminum. The rest of it is fairly small. So zinc, etc., is not zinc, copper, etc., are not very large metals in the country. Among aluminum and steel, I think given where we are on the steel cycle globally, it is a little difficult to be bullish on it because the only thing that is protecting the domestic steel industry is the kind of tariff protection that we have against imports. And while that is likely to continue, it is not going to, unless the government decides to increase it a lot more, it's not going to be something that is, which is the reason you should be celebrating the growth in the industry. Aluminum is a different kettle of fish. I think the growth there is a little better. The international prices, the international part of Hindalco's business, for example, is also reasonably doing well. Large capexes are announced, which can be a bit of a drag, but assuming that those projects don't go off, take longer than they expect, or the project costs don't go up, that is perhaps a little better positioned in my view.
Right, talking about metals actually, let me actually bring on board my colleague Ashesha to talk about what exactly is happening in commodities globally, because it's not only crude that has been under pressure, it's the other segments of the commodity market also under pressure. Ashesha?
Well, yes, first up, let's talk about Brent crude because it has now fallen that below $72 per barrel mark and it is down nearly 10% in the last 1 week alone. On a year-to-date basis, Brent crude is now down nearly 6.5%. Growth concerns from US and China is the main reason. Remember, China is the world's biggest importer of crude oil and demand concerns from China is weighing heavy on Brent crude, and that is the reason we have seen the kind of fall in the last couple of days. Let's also talk about iron ore because iron ore prices have fallen below that $90 per ton mark. Concerns from steel mills in China is weighing heavy on iron ore prices, and that is the reason we have seen a fall. Concerns about China's steel sector demand and steel purchases in China have seemed to have taken a backseat. However, there are some hopes that perhaps steel demand could pick up after summer, which could probably provide some support to iron ore prices. But for now, they've broken below that $90 per ton mark. Gold prices, meanwhile, on a month-to-date basis, they've remained flat. But if we look at the trend on a year-to-date basis, gold prices are now up nearly 21%. As far as other base metals are concerned, aluminium prices on a month-to-date basis are down 4%. Zinc and copper prices have declined 7 and 3% respectively. So yes, across the board, from crude oil to base metals, we have seen a decline over the last couple of days.
All right, thank you so much for that, Shesha, for outlining what exactly is happening in the world of commodities. But Naresh, let me come to you. What exactly is happening with ONGC? Because yes, crude oil price falling, it's not positive for ONGC or for the matter of fact, Oil India and Reliance also. But ONGC, today sharp cuts, you have City downgrade as well.
So essentially, if you look at the windfall tax, ONGC does not benefit on the upside as well as on the downside. Finally, it's coming to a price, Brent crude, where windfall tax will become minimal. The stock had rallied a bit in the month of July to August, say started from 285 to 90 and went up to 345. That's been corrected. But the last major breakout was around the 285 to 90 mark. So it's actually an accumulated current levels with a longer term view because the stock has given a breakout above the 2014-15 highs, which was at the 280-300 mark. So this band of 280-300 being tested is a good entry point for the long term. It's almost a 10-year breakout here. So eventually the stock could surprise on the upside. Oil India has already gone up 100%. ONGC has not done a similar move. So a contra bet right now is to go long on ONGC.
contra bet to go long on ONGC, but Kunal, let me actually come to you. And since we've talking about PSU space, how that entire space is taking it a bit easy, I wanted to understand what's your take coming in on these fertilizer counters. How are they looking to you on the charts? Anything that's standing out to you?
So the three key names, Coromandel Fertilizer, Chambal Fertilizers and RCF, I think all three of them, they're looking quite interesting on the charts. Chambal Fertilizer, for example, the stock is finding good support at the 500 levels. It's gone through a major time-wise correction over the last 2-3 months, where the stock has been stuck into a range of 500 to 525, 535 approximately on the upside. But I believe eventually the stock should be able to break out on the upside and end this zone of resistance. So I think on the upside I would probably expect the stock to scale towards at least a 575 to 600 kind of a target range for itself. Coromandel Fertilizer, the stock has been trading into a mild correction. I think a 60 or a 70 pointer correction the stock has seen from 1860-70 mark towards 1780-85 levels for itself. Looks attractive at current juncture. The only charts, for example, RCF is the one which is looking a bit more weak on the short to medium term. So I think the stock hit levels of 200 or 220 last week or so, and from there the stock has fallen very sharply. And that too on the back of higher volume. So that's the only chart which is looking a bit more jittery on the fertilizer pack.
Alright, so that's the take coming on the fertilizer pack. Coming back to you, Anand, have you taken a look at Ola Electric? Do you track this particular counter? Because today it's under pressure. The 1 month lock-in period it comes to an end. Also, you have Ather that's gone ahead and filed for that DRHP for IPO. How do you see now all of a sudden the competition in the listed space heating up?
I'm not particularly clued on to that sector, so you'll have to leave me out for that.
Okay, point taken, but we'll talk about the other sector that perhaps you're tracking more closely, and perhaps you've been looking at the JSW group, because this morning Jefferies came out with a note as to how that entire group might be looking at a bit of a re-rating. Steel has been focusing a lot on profitability. The most interesting space as per them is the energy basket, and then JSW Infrastructure just an hour ago or so announced an expansion as well. Have you been tracking that, Anand? And if you are, any particular stock that you would want to bet on from that particular group?
Well, as you mentioned, the two interesting areas that they are into now is the energy and the infrastructure bit. Aside from Adani, they are the only ones who seem to have a serious intent to grow the infrastructure asset base that they already have. And that will certainly stand them in good stead going forward, especially if the Indian trade business is actually going to do well. The power sector, I'm personally a little less sanguine about, simply because of the fact that you're looking at current numbers, where suddenly after a gap of several years, the uptick has come through in terms of prices, and that is causing all current assets to be bid up. However, none of the fundamental issues regarding the power sector, to my mind, have been sorted out. Essential among which is, how do you get state governments to stop giving away freebies and getting the users to pay, and how do you collect that? So I think the distribution part still remains somewhat of an unsolved problem. You have to only look at the numbers for the state-run distribution companies to see what I'm talking about. So while currently there is a kind of huge bid up in terms of all kinds of energy on the entire energy producer basket, I think in that space perhaps the transmission lines and so on are a little more protected in terms of cycles rather than the generators themselves.
Right. Talking about the power space then, Kunal, power has had a good run of its own, but with the rest of the PSU pack, we've seen also power also quite dwindly, isn't it? But anything that's standing out to you right now? Any of the names?
So only Torrent Power is the only one which is the strongest amongst the pack. Tata Power as well as NTPC, Power Grid, etc. Many of these stocks, they had a fair share of price uptrend, but somehow these stocks have gone to a prolonged kind of a time-wise correction, mild price correction, I would probably say, because of the beta nature of these stocks. But in terms of the current chart structure, Torrent Power is something which looks attractive. The stock is trading at 1670 approximately. The recent high for the stock was about the 1800 mark, and the volumes the stock has seen in the last 3-4 months has been much on the higher side. In fact, there have been 2 bouts of higher volume day for Torrent Power, where the stock has moved up almost 200-250 points on that single day volume bar. So that indicates that there's been strong buying which has happened into the stock. So I think a buy and dips approach for Torrent Power could be something which one could look out for.
Okay, buy on dips on Torrent Power, that's the verdict coming in. But since we are talking about the PSU space, let me take it across to my colleague Prakash as well. He's been picking up some story from his exclusive sources that there could be 3 or 4 companies that are lined up for disinvestment this year itself. Prakash, tell us more.
Yes, we are learning from our sources that the government is planning to sell a minority stake in 3 to 4 PSUs during current financial year. We are given to understand that small stake sales through OFS route will be the preferred strategy for this investment, and the focus will be on obtaining fair value based on market conditions. Along with that, we are also given to understand that the OFS announcements will be made according to the market appetite, and a sufficient gap will be provided between two OFS to ensure better market response. When it comes to stake dilution in IREDA, we are given to understand that the proposal for a 10% stake dilution in IREDA is under active consideration of the government, and a final approval will be provided very soon. Along with that, sources are also informing that the OFS is likely to be invited for PSUs in sectors such as power, defense and railways. The government will proceed with a calibrated disinvestment strategy where value generation, asset creation and a listing of non-core assets of PSUs will be prioritized. Along with that, when it comes to big-ticket disinvestment, sources are informing that the large disinvestment transactions will be taken forward based on market conditions, but the divestment of IDBI, SCI and BEML is unlikely to be completed during current financial year. However, DIPAM is targeting to invite financial bids for IDBI by end of financial year 2025. As you are aware that the government has not set a specific disinvestment target in the budget, and moving ahead with a new set of strategies under given circumstances.
Yeah, it was interesting when there was no number in the budgeted document. Thanks so much for that, Prakash. But just getting back to your conversation, Anand, and wanted your take regarding IT as a pack, because it's a perfect bull versus bear case scenario on the street for that one. Today as well, you have names like Sonata Software, Birla Soft, which are coming under pressure. But on the other side, the likes of Tata Elxsi, etc., are perking up. What's your take, especially in the second, rung of the IT majors?
Well, essentially, unless you have a specialization in terms of some area that you are working in, I think the generic IT development story is somewhat weak. While we have seen a lot of growth coming through largely now in the form of takeout deals, to my mind, that just reflects the fact that the client companies essentially want to get rid of large chunks of people and are willing to tie themselves in for 3 to 5 years to make sure that the liability of the salary structure doesn't fall on them as the technology scenario changes dramatically globally. So you have to be, especially now, not even if you're in services, you have to have a certain set of niche that you are really good at which where you can then justify the reason you are existing. And that's why you are seeing some of the companies in the smaller sectors which are particularly more focused than generic suppliers of working in let's say financial services and so on, which almost everybody can claim to be doing. So overall, I think you have to look for niche plays, but even within that, I think some of the companies in India are quite steeply priced. While they may have good client base and so on, you have only to look at what's happening globally to see that some of the companies which are a lot more specialized overseas are far cheaper. So at this stage, while from a asset allocation point of view, you have to continue to hold some part of your portfolio in IT, I don't think that I find compelling value in almost any of them.
So not a compelling buy or a compelling value attractiveness there. But Kunal, a couple of names which are actually shooting up. PNB Housing, a 7% surge, and then Paytm also is moving on heavy volumes. What do you make of it?
Yeah, it's been a good series of last, I think, 2-3 weeks for PNB Housing. There was this news flow for the stock where, the stock moved, I think, from sub 825 or 850 levels to 900 plus mark. And from there on, the stock has seen a consistent upside, I think, the last 2 weeks or so. So I think it's a very strong chart in the making, and looks like that the stock is restarting a strong multi-month, quarter uptrend cycles for itself. So this could be a series of potential, strong up moves for PNB Housing, which you may expect over the next few, months and quarters. I also believe Paytm has made a very strong comeback. So a stock which was lingering at the 400-450 mark for quite some time. I think when the stock managed to break past about the 500 odd levels, that's where it managed to break above the 200 DMA. which was a very key resistance for PTM, because the stock over the last one and a half odd year had been, when it was falling down, it had traded significantly below its long-term averages for quite some time. So that remained to be a breakout point for PTM. Now the stock seems to be into fine fettle, so looks like that this 500 to 525 odd mark could act as a support. So traders with a medium to longer term time horizon can keep that as a stop loss or a support for PTM and continue to hold on to long positions.
Okay, so that's a take on Paytm as well as PNB Housing, both quite active in the trading session right now. But what's not been fairly active is what the GST committee has decided, because there has been no major outcome, at least from the GST Council meet so far. Uttarakhand Finance Minister Premchand Agarwal says that the issue related to GST on R&D has gone to the fitment panel, but the recommendations on GST on religious travel off the chopper has been cut a bit. Listen in.
हेलीकॉप्टर सेवा हमारे यहाँ जैसे बद्रीनाथ, केदारनाथ या अन्य जो हमारे तीर्थ स्थल हैं या धार्मिक स्थल हैं या हमारे धाम जिनको हम बोलते हैं, उसके ऊपर जो जीएसटी है वो 5% का जो हमारा सुझाव था उसको मान लिया गया है। और उम्मीद कर रहा हूँ कि वो जब नोटिफिकेशन जारी होगा तो हमारे जितने भी श्रद्धालु हैं आने वाले, क्योंकि हमारे यहाँ आप जानते हैं 4 धाम यात्रा में बहुत सारे लोग आते हैं, तो स्वाभाविक रूप से उनको एक इससे लाभ होगा। और हमारा जो मंतव्य है यानी उत्तराखंड का या हमारा माननीय मुख्यमंत्री जी का, वो इसमें आज निर्णय हुआ है।
Okay, so no major announcement as of now. Let's see what the rest of the day brings. But time now to take the BTSC trades from our technical experts. Naresh, what's the buy today, sell tomorrow idea, or is it STBT?
Both buys. First is a buy on ITC close to a new all-time high, stop loss at 505, target price of 525. Second is a buy on IEX, which has slowly and steadily continued in the uptrend, even with the market correction. Stop loss at 208, target price of 218.
Okay, those are the top recommendations. Kunal, what about you?
So I'll go with the buy on IEX with a target of 222, stop loss at 205. The stock looking attractive, more consistent about the 200 plus levels. And Biocon is something which I recommend in the morning. Looks attractive. The stock has gone into a recovery phase today, coming back into a breakout just about the 375 plus mark. So would look out for targets in the range of 387. Stop loss could be kept at 365.
Okay, so those were the top recommendations, but just taking stock of what else is buzzing. Godrej Consumer, we should pull up the intraday chart. That's suddenly seeing a spike. A Prestige Estate 2 is building on to gains as we speak. What's your take, Naresh, on these two names, Prestige Estates as well as Godrej Consumer, sudden breakout in both of them?
So Prestige as of now looks like a consolidation. There have been some blocks in between. So for now, till the time it doesn't sustain about 2000, would be an avoid. Godrej Consumer, on the other hand, looks interesting because the whole pack has been doing well. Above 1500 would be a breakout for the stock.
Okay, point taken. Anand, what else is looking interesting in the market? Because a lot of those, themes of earlier times, let's say defense, manufacturing, power, etc., have played out a bit. In fact, the likes of autos and real estate have come off. Any other fresh theme that you have looked at, or any other stock that looks interesting right now?
I think among the broad sectors, the themes they are not particularly cheap, but those which will persist remain things like insurance. Housing finance, I think, is going to have a new lease of life simply because there is a new company that is going to get listed or will emerge, and therefore that will attract some attention. Also, that's a sector where there are many new companies which have got listed over the past 2 years, which are actually reporting fairly good numbers. I think travel tourism continues to remain reasonably attractive and robust, because even today you are seeing numbers which show that that's a sector that is continuing to do well. And selectively, I would imagine real estate will, for at least the next 12 to 18 months, continue to report reasonably good numbers.
Okay, on that note, we let you go. Thanks so much for joining us today, Anand.
If you like this video, then like, share and subscribe to ET Now.